Hi guys, I'm going to teach you my strategy and how I trade and how I plan to trade throughout 2026. This is an example of the US dollar index, which coincides with FX. So I found that this strategy or this sort of method of trading works a lot more with currencies than it does with commodities and with futures, because of obviously of the fact that it's a 24-hour market. However, you still can utilize these principles to go forward. So I'm going to focus on this expansion upwards here. I'm just going to explain sort of the reason why I've got Asia range and New York PM session here. Um, so the main basis of this is the power of three, or ICT's concept of accumulation, manipulation, and redistribution. Um, when you are bullish, what you want is a market that does this in Asia, this in London, and then expands higher towards New York, within New York, and ends the day in the New York session higher than it ends the day in the Asian session. So what you will commonly find is that the New York session will have the high of the day, and the Asia session will have the low of the day within this true day open here. So within the time frames when 8 o'clock till midnight is Asia session range, midnight is a true day open, and then by the time you get back to 6 p.m. the next day, that is the range. So this is what it looks like. Okay, so in this instance here, we've got a daily open, market heads lower, and then does what it needs to do. And then in London, as soon as London opens, it just starts to expand higher, gives you an opportunity for an entry back in here, provided that you don't get below this proposed Asia low. Now, sometimes it does do this, so it takes out the liquidity down at these levels, but these levels held on that day, and then it expands higher within the New York session. Towards the end of the New York session, it continues to expand higher. That's exactly what you want. Okay, so this is sort of the perfect day, if I could describe it as that, because you had exactly that happen. You had the daily open from 6 p.m. Or 8 p.m. the previous day, which is when futures markets close. Futures markets actually close at like 9, but it depends what you're looking at. So from 8 till midnight, you've got your Asia range, New York time. Midnight New York is your true day open, so the market did not expand lower. It then headed higher after London open. So 2 in the morning, you had this expansion, and then 3, 4, 5, you've got the Europeans expanding, moving this price higher. When it starts to retrace, it retraces before you get to New York session, giving you an opportunity to enter an order block on fair value gaps in here, right? And provided that if you put your stop below here on a bullish day, there's a high chance that the market continues on to the high side. And then by the time we get to 9 a.m. US Open, you've got another opportunity to enter based on a change of a break of structure. So, 60% or 70% retracement, and then the market moves higher. It even comes back down, gives you another opportunity to enter, and then continues on higher towards the end of the day, where it makes the high of the day before sellers come in. Well, this is profit taking towards the end of the day, and then it does exactly the same thing again. So this is a slightly different perspective, because we had some news. This is NFP, so the market's going to be moving quite rapidly. So this is a manipulation move to target some liquidity down at the level, down at these lows. But as soon as this happened, you could have decided to enter and go long, even getting an opportunity to enter on the retest of these levels here, provided that your levels that you've marked out support your thesis. But yeah, so when you are obviously trying to go bullish, or you've got a bullish perspective, this is what you should be looking for. This is the sort of daily profile you should be looking for. And on the daily time frame, it looks like this. You've got obviously your wick that forms in Asia or towards the start of the true day open, right? So if I look at it from the left-hand side and now transpose it to the right-hand side, you can see the wick was formed at the start of the day. You then had market structure shift as we entered into London. You had some opportunities to enter here, break of market structures as you entered into the New York session where market moved higher and finished the day towards the high end, which you can look at here. And then when the new day was formed, it had a small retracement, which was this retracement, which was Asia again, found some buyers in the overnight sessions, and then had a market structure shift into London before moving higher, again expanding higher. And then this wick here coincides with the wick, the market moving lower. So yeah, this is a really, really simple model to follow, and I think it will cut down your learning curve quite a bit. It will shorten the amount of information you have to see, the amount of things you have to look out for if you keep this daily profile in mind. But yeah, thanks very much for watching. I'll see you guys later.